So you're excited to show up to title, you're about to buy your first house, you've picked out all the furniture that you want on it, and you get to title and they say that you have a bad DTI. So how do you fix this? So in this video, what we're going to discuss is how to fix a bad DTI, what is it, and a few examples of how to get a better debt to income ratio. So in case you're wondering who I am, I'm Davin and I help local entrepreneurs, college students, and people who just want to get ahead in life overcome their biggest financial burdens by eliminating their rent bill and replacing it with a plan towards financial freedom. So if you want to know how to calculate your debt to income ratio, it is simply the amount of debt payments that you make every single month divided by the amount of income that you make every single month. Now, some people, it might be a little bit more complicated to calculate what their income is because they might be a business owner or they might own certain assets. But for most people, it's just going to be your job. And then your debt is simply your credit card payments, your student loan debt, pretty much anything that is a payment that you make to a credit company, that is going to be on your debt to income ratio. All right, so let's address that first example that I gave you during the intro of this video, which is you're currently under contract and you purchase something that is going to go on your credit card and therefore your credit report, and therefore it's going to affect your debt to income ratio. The only thing that you can do in this situation, unfortunately, is to kind of bite that bullet and return those items that you've purchased. It really is a bummer because you might have gotten those items on like a 50% off sale or whatever it may be, but that's really not worth not purchasing a house over. So I would much rather you return the items and live in your house with some used furniture rather than being on the street with furniture that you obviously could not afford, right? So the other 4 ways of getting a DTI are going to be more proactive than during a contract and just simply saying to return your products that you've purchased, right? So the second way that we can improve our DTI is our credit score. Our credit score affects our interest rates, and our interest rates affect our total monthly payments. So if we can decrease those payments, then we can have a better debt to income ratio. So that's one proactive way of preventing, a bad DTI. Methods 3 and 4 are going to be kind of a combination because you're going to want to work with some form of financial professionals. Now, there's a variety of different ones. I'm not a financial planner per se, but I do work in the financial industries, right? Being a real estate agent, I do have to deal with market values of people's assets, and they are absolutely something that is going to affect your finances if you're looking at investing in real estate. So I would either talk to your realtor, talk to a mortgage lender, or even talk to a financial planner or a tax professional. Talk to somebody about your financial decisions, especially when you're going to make a big purchase. So before you even make a big purchase, you should be talking to those people. So the other step 4, is going to be to pay off your debt faster. Now, you're going to want to talk to, again, a financial planner to tell you which debt to pay off first, because it's a lot easier to pay off that $5,000 credit card first at a 22% interest rate than it is your 0% car loan that you owe $30,000 on, right? One of these loans is going to be way more effective at increasing your DTI for how many dollars that it takes out of your budget to pay off that debt faster. So the 5th way that we can affect our DTI is making more money, because remember, it is a debt to income ratio. So in this ratio, there are 2 factors that affect it. Our debt payments, and the previous 4 methods all talked about our debt, and the previous 4 methods all talked about our debt payments. But this last method is just going to talk about how to increase your income. So you can ask for a raise at work. Honestly, this is going to be the easiest way, whether you're going to be working more hours, getting a promotion, taking on a new responsibility, whatever it takes you to negotiate with your boss a little bit better pay is going to be the easiest way to increase your income. Now, the second easiest way is probably to get a side hustle, which you can simply do by honestly using some of your skills and applying them in finding customers. Now, it's going to take years for you to do this. So people who are dedicated to a little side business, like maybe math tutoring, or they mow lawns on the weekends, or they do something that they get paid for, pay taxes on, and it shows up on their tax return. You got to be pretty serious with this method. And so I would only encourage you to do that if you're extremely entrepreneurial. The other way that you can increase your income is by house hacking, which that's why we are the House Hacker Tribe. So absolutely try to have as many roommates as you possibly can when you're young. Live like a college student even after college, and you will definitely be a little bit closer ahead to being towards financial freedom. Now, you can't necessarily use your roommates' payments towards you as income in all circumstances. So you're gonna wanna make sure, again, you talk to someone who understands the laws with this and understands your personal tax situation. And now the last way that we can increase our income is by purchasing investments. So I usually talk about equity growth strategies, especially when you're younger. But if you already have a lot of stocks, for example, and you switched some of them over to dividend paying stocks, those dividends would provide you a certain amount of annual income, which you can, again, report on your taxes, and you're gonna use that to increase your debt to income ratio. If you've got any questions, comment down in the comment section because I would love to answer them. Debt to income ratios are a very complex topic, and obviously we cannot go over every single example in today's discussion. Thank you for watching and have a great day.